you need to know why you think the crisis happened in order to know what you think you should do. And to my mind, there's a fight going on between three different narratives. Narrative A was very ably described by Peter. It's the government's fault. It was pretty much the housing bubble, and the government created the housing bubble. Second narrative is more favored by the left wing in this country. It was Wall Street's fault. It was basically greed and bad incentives, and you throw in some stupidity. The third narrative, which is closer to my own view, is it was everybody's fault. And the reason that I believe it could have come to that point, and I don't mean literally everybody, of course, but I just mean that it was very widespread across all types of institutions and groups of individuals, is we had 25 really good years in the financial markets, from 1982, when the Dow bottomed at 800, to about 2007, when the Dow was about 20 times higher. Other financial markets also did very well over that time period. People basically learned that taking risk made sense because not only on average did you expect to do better, but in the lived experience of a quarter of a century, you did a lot better, and all you really had to do was wait if things worked out badly for a while. I was working in the financial sector when things started to blow up. I was at JP Morgan at that time, and I strongly disagree with Peter's view that further financial crises are unlikely. I absolutely do agree the housing crisis was unique in its own way and larger than I think we're likely to hit in the future. But I believe that by the time the housing crisis was hitting, we had so many imbalances and so much excessive risk-taking in all forms of the financial sector, something was going to blow up. Now, maybe it would have been a stock market bubble that burst very badly, a commodities bubble, and maybe it wouldn't have been as bad because housing is uniquely large and pervasive in our economy. But I do believe it makes sense to assume we're going to have further crises in the future, as we have over the history of the United States, and work to try to deal with them. I do agree with one thing that I think would be implicit in Peter's logic, that if there is a financial crisis, we probably won't know why it's happening. So much of what I favor is things like higher capital requirements that protect you under a wide range of circumstances, rather than, and I certainly agree with Peter on this, it doesn't make sense to design the regulation to deal with what we just went through. What we just went through identified a number of weaknesses that are general that we ought to correct, but the next crisis will catch us by surprise. If it doesn't catch us by surprise, it won't have engendered behaviors that were so pervasive that it will be a crisis we care much about. So I do agree, and I certainly hope that the commission that Peter is on can come to a good view of what happened, something that will guide us going forward.